My name is Dontez Lindsay. I am the general manager of Ducks Trading LLC, as well as the lead trainer of StockCraft. I'm not a financial advisor, nor a CPA, and the content I create is for entertainment and educational purposes only. I trade in my account, and everything I do is hypothetical in nature because it doesn't happen in your account. My experience with trading is not typical, nor does it guarantee that similar results will be obtained by you. I am merely sharing my opinion with no guarantee of gains or losses in investments. Remember, day trading can be extremely risky. You should be prepared to lose all the funds that you use for day trading. In particular, you should not fund day trading activities with retirement savings, student loans, second mortgages, emergency funds, funds set aside for purposes such as education or home ownership, or funds required to meet your living expenses. Further, certain evidence indicates that investments less than $50,000 will significantly impair the ability of a day trader to make a profit. Of course, an investment of $50,000 or more will no way guarantee a success. With that out of the way, let's get into the content. Good morning, guys. I just realized I'm a little shorter today. Yeah. 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 There we go. I don't like change. Okay, I'm just like, all right, so today we have a few things that are up on the scanner. There's one with a resistance. It's around $2. It's a little bit heavier than I want for any kind of like bullish play I'm looking towards. That's PEGY. And then you have the back end of AERC, which, you know, it's been running for a few days, but I still think it needs a little bit more room before it's shortable. Other than that, there's also tops, which, you know, PEGY, tops, and KITT, which is the top play right now, or like the top in the scanner. They're all micro floats. So I'm trying not to rush into micro floats unless it's just like very obvious trades or setups. And PEGY, it's not a pre-market breakout. KITT, this is up like 70%. Do you know KITT float is 0.2 or is it 12 million? So I'm looking at a different scanner and it says 1.8 in their float and market cap is like 270. I go to FinViz. Actually, I could just go to all of them at once. What do you call it? Search results. No, not that one. Float results. KITT. Yeah, so this one. So I don't want to say 0.2. Like that sounds a little too exaggerated. I want to go with 12. But we can always tell by the price action. And, you know, it going straight up like this. I forgot the news. I don't think there was any. Oh no, that must have been PEGY. There actually is news on this. Yeah, so I don't think that's the 0.2 is right. I think it'd be 12. Yeah, because they just got a contract winner. So it's like what do you call that? Like exclusive rights to something. And if you ever get like exclusive rights to something, everybody thinks you're credible. So yeah, that's worth the extension that it has now. And probably a little bit more, like 30 to 50% more if it could run. Now that would be a normal like 10 million float. If this was 2 million, it would already be over 100%. And then pulled back and then like come up again. This one just is going straight up. Like this kind of price action looks kind of normal for this amount of news. Now, if there was like a little less popular news, then I'd say, it's too volatile. And for right now, this is okay. But KITT. Okay. Kitty. Okay. I've been watching animal videos like most of the morning. I blame Twitter. It's a hole. I keep falling in. All right, 20 cents per share. The main thing is, if this is a 10 million float, it's already up 70%. Let's say it runs up to 120. If we're looking at, history and look for consistent resistance for a gap up short, I don't think it has it. Yeah, that's because it came out in September. But it does have a little bit of volume. The heaviest day is 3, and it's already at 550, which is right now. I think this can act as a consistent resistance. It's like, at least it gives people somewhat of a target. Main thing is, if I'm just treating this like a normal gap up short, I prefer to do my normal like gap up percentages. Yeah, pretty much going in at 7. And at the earliest, depending on what kind of volume it has at the open, pretty much 6. Whenever you're dealing with like resistances, you want to go to the whole number or $0.50, depending on which one's closest. So 6 or 7 for me. 6, I'd risk a lot less than I would for 7. Let me throw in one more. Well, that's the top of it too. There's no heavy volume days. Yeah. So when it comes to like float rotations on stocks under 10 million float, you can definitely start seeing like float rotations of like 3 to 5 pretty early. And when you get towards like 4 to 5 rotations like in the first like half hour, that looks like a high amount of liquidity, and there's a chance that it can fall on top of itself, because that's what like crowded tickers do. Like they either just straight dump at the open and then come back, or they like just go straight up and then they fall on themselves. It's just a lot of like volatility in the beginning. But when it comes to like these micro floats like under 3 million, it kind of falls into a different category. Like if it has a small amount of volume, there's no actual higher chance that it's just going to fade at the open. If anything, when liquidity gradually comes into the chart, having a smaller float means at that specific price level, that's the max amount of bag holders that can be trapped there. And the thing is, the same thing happens for support. The buyers are looking for multiple layers of support to like buy into, and at different float levels, that's the maximum amount that can be trapped at a single level. And so the psychology kind of changes a little bit. Someone was asking if using short strategies, like bad looking short strategies, are good for going long. I think getting into that kind of scalping mentality, it's just like, oh, this is a bad short, but that would make it a good long. It can get you like, a few scalps, but overall, you still don't have an edge. Like there's more likely that it's going to go your direction, but the thing that's supposed to keep it that direction is supposed to be the criteria. Like you just don't want to go in just because it's a low float, or just because it has like a lot of amount of volume, or it's a cheap price ticker, or because of a specific sector. It's like some kind of combination of all the signals that you want to go for. Okay, AERC, BA overextended gap down. So that's only up 100%. So technically, if you start back to, the last red day, look at the close at 277, and then go to the top of yesterday, which was about 6. This is still like, you want one of the days that it gaps up to be over 100%. And you got that yesterday. And so technically, like it kind of fits it, but I still won't say it's ideal. It's like I can convince myself that this is right, but it's still something I wouldn't go right into. Like 9 out of 10 times. But if I look at it, yeah, this is it already did 3 green days. It did the multiple, or it did go up by at least 100%. It did do its pullback, but the pullback was supposed to stop at like 750. This one stopped a little bit under. It says 750. I might be thinking of a different ticker. Five. Yeah, it's still below that. So the thing is, if it did a bounce up to that point before it opened, then I would have considered it like a 1 star. But I still don't think this is ideal. I prefer. So me and Steven were talking about it the other day. Like there's different like winning percentages based on like how many days are involved. For those 2-day overextended gap downs, they have a little less odds than like multiple green day overextended gap downs plus extension. At the end of the day, like it does show some sign of looking like it. So I just say lead with your risk management. Just keep it pretty tight. And I'd rather, yeah, it didn't have any volume, which is if we're looking at like what happened yesterday, such a little volume on I think it was FNGR and falling like that. Maybe this would do something similar, because we used to think it was a sympathy play when this first started peaking. Other than that, still trying to decide if I want to do a gap up short on this KITT. At least it doesn't have super cheap borrows, and should expect a like a massive squeeze later. That's finally decent. Tops, this was also a low float. Do it. I want to go back to my cat videos, or not my cat, but like what do you call that? Like a duck and a raccoon. Yeah, most of these have like really low market caps. Like I saw one earlier with 11. INDO. Yeah, there's a few tickers that they were the hype plays, like a SHPH, BNGO, INDO. I don't think Tops ever ran, but HUSA, like all those, most of the people in the penny stock area traded those. Those are coming up. So I don't know what that's going to say in terms of who's going to get the volume, because the volume might just drop on everything if you get too many I want to call them OG tickers that pops up, because everyone's going to choose their favorite or their most one that scarred them. But then the volume is going to be spread thin through everywhere, and things are going to drop earlier than you expect. Yeah, this one tests the pre-market high. For those people that were waiting on overextended gap down on AERC, maybe we can get this up to about 5. Yeah, but that's not really likely because it's under 1 million right now. Yeah, but the volume is definitely spread thin. PEGY, this has a resistance at 350. Yeah, but getting to that point. Oh. Yeah, it has to move over 140%, and it's already at 50 something. I already would have went in at 140% as a like normal gap up short, even if this is like down trading chart, low cap, low float. But now that you have a resistance on it too, that actually makes it really good odds for me. Now this is one of those ones that are a penny, so it was more of those. The reason I went to the animal videos before was because I was trying to buy it again. I have this bad bias or tendency to just want to buy things that now I can't short. Especially in the pre-market. I keep forgetting why I don't, wake up at 4 a.m. It's mostly because of all my FOMO I get from the pre-market. But let me just look this way. What are you doing? Quick question. Low volume. Yeah. Low volume doesn't necessarily mean it's going to drop. Like low volatility in a chart, that pretty much means there's going to be volatility for a very short amount of time. In the high volatility where you have, decent amount of pre-market volume, there's a lot of spikeability in the chart. That means that can run over a few days. And the way you measure that is mostly just relating the chart to itself. Like that's what the volatility does. And so you'll see the volume come in, you'll see the price action and like how it's supposed to get heavier and things like that. Now, yesterday for FNGR, there was a lot of people calling this out as like a momentum shift, which is, that's definitely fine. This went over several days. And the squeeze from like 6 to 10 is pretty big. And it happened in the after hours with like, a solid pullback. I think if I didn't get a tip, I probably would have did something similar to what everyone else was trying to do, but I still would have wanted a push. But I could definitely see where like the momentum shift like is coming from. Just because, it's been going up for so many days. And then this last stretch, it was definitely like the highest volume day. This was definitely a pivot point. I think my mic just screeched at me. But the consistent resistance is being overwhelmed and due to the float rotation getting taken out easy. Yeah, that's the thing. If volume keeps growing like this, also warrants price is 11.5. Wait, what? There's warrants? 11.5. Oh, AERC? I do remember this being like a lot higher before, after getting squeezed a few times, like over 6 months ago or something like that. All right, so for now, I'm looking at KITT do its thing. It's still a low float aerospace sector. Recently IPO, downtrending chart. I wouldn't consider any of these below 6 enough to stop it. Yeah, I'm pretty much waiting for that like 110% like minimum, and then I'll borrow. Probably might not be shares after that though. Tilted. Oh, Holtz. It was something I wanted to say. Like a few weeks back, we had. It was like only a couple weeks back, actually. We had something that halted up 3-4 times in a row. And it messed up like everyone's day because it was hard to read the price action, hard to get like a decent risk management because it was all halts. I think someone on the back end was trying to use one of those halts as a resistance. Like when you halt, you're not trading. Like there's no bag holders that are going to be there. So like the like going up or going down, there's no one trapped in between. You can't really use that. So when you have like 4 back to back with like very little like actual trading in between, you can't really use that as a risk level. That's all I really want to say. Yeah, overstanding gap down needs 100% extension. I short partially FNG 6.9 yesterday with momentum shift pattern, but it's hard to target because there's no push at all. Yeah. 50%. Oh, never mind. Is FNGR first red day today? So technically, yes, since it's his first red day. And it did have its bounce. But where would you risk off of? Like the chances of it bouncing back up to. Yeah, it'd just be hard for me to like manage it if I try to do anything with this, because I wouldn't feel comfortable. How do you say this? So like this support became resistance again after it like went under, and now you have like a new like after hour plus, pre-market resistance, and like the going in between those two to the next what do you call it, neutralized area. It's a little tight. Like before, at least you could, drop all the way down to 6, but now we're already at 5. Like, so you can get like $1.50 there, but I don't think this actually can drop to 3 like pretty soon. anytime. There we go. So when based on predicted volume, there will be flow rotation. You recommend not shorting it until buyer insufficiency appears, but only go long when it looks like multi-day breakout. Yes. Yeah. I feel like you should hold your longs longer. Here, like there's certain biases for shorts and there's certain biases for long. When it comes for longs, I feel like you want to go small and you want to just hold it as long as possible because you know there's going to be a lot of noise in between. When you go short, I feel like you want to go in a little heavy and then wait for confirmation to add more. But longs, it's more of I don't know how to put it. I feel like it's a little more fluid. I actually don't have a lot of experience with longs. Most of the time, I just want to go in like really big, but I also know that's actually how you get targeted. But in terms of like how I think the price is going up, when you look at a pre-market breakout, before you have a like gap up short that doesn't like gap really big in the pre-market, it looks like a pre-market breakout. Before you have those parabolics that go up like 200, 300%, it's a pre-market breakout. Before you have a gap through resistance, sometimes it's actually a pre-market breakout. They all kind of have the same action that looks like it's going to be a multi-day runner. And what they have in common is not only the same kind of like counting pullbacks, like low liquidity eventually turns into high liquidity, especially on like a little softer news. The thing is, you want to have enough to catch and like make layers of support, because that's what's really driving the stock and making buyers keep coming in and then getting those early shorts trapped. It's that you have enough to where both sides don't have like incentive to just fully go in. I still can't hear you. Jesus. Go to church. Okay, I'm done. KITT has warrants at 11.51. Really? I think I know why I have buying fever now. I reviewed my charts the other day, like from last year, and like I had over like 20K in buying, or yeah, I won 20K in buying over like 5 stocks. That's why I just wanted to buy everything. I was like, where is this coming from? But most of them were healthcare stocks. And what was more popular back then was like technology. No, that was March, February. Healthcare stock. And microfloats, definitely microfloats. Oh, well. What am I doing? Do you use level 2? No. You need a lot of experience to look at level 2. I can definitely see like when there's a wall of sellers and a wall of buyers coming in, when the spread's getting pretty, wide, and you're expecting a lot more. Like there's things you can look at on level 2, but the stuff I'm doing, I feel like it would just distract me. Like too much ADD, ADHD, and everything else. If I don't see it, it doesn't exist. And like if I want to choose what doesn't exist, I say a level 2 does not exist. I forgot what I was about to say. So we have over 31 million volume on PEGY, and it's looking really, really crowded. Like when this gets to like 50, 60, should be about 10, 20 if it keeps up at this rate. I remember this started at like 10 million in the pre-market. But it's also, I wouldn't call that crowded, like too crowded. All right, so this one just unhalted and it went down. I want to see how the borrow fees are affected. I still want it to go up to 7. But if it can get back to like under 20 cents. So technically, since this is $6, I'm comfortable getting all the way up to 60 cents for a borrow fee. Because that's like, what is it? I just need 10% to break even. Yeah. Or is it 5%? I just know what I'm comfortable with. Or know it's expensive in terms of borrow fees. But for now, $20 million volume. That's nah. I still think it should go up. No way. Come on. So, no shares available for KITT on TZ. What? Wait, they're all gone? How much would I get? What? Gap up short. So 70%. I think that's like 15K. Also want to 7. So 260. 2000. What? There's borrows. When I saw them earlier, they were 0.25 a share. So expensive for me. 29 cents on TZ now, but I saw them pop up over 50 cents earlier. Yeah, I can never tell what's real on TZ. Like for a while they were 13 cents. You go to them, they'll turn to 30, and then I already imprinted on the 13 price, and now I feel cheated. But what am I doing? To the people that were saying this one was a first red day, just looking at the daily, yeah, you could say that. Because all you need is a first red day with enough pull to pretty much say there's going to be a bounce the next day. I was saying yesterday that I wanted the late day, midday buy on that. I just feel like I have it's a certain fever, they used to call it. Like something like dip buying fever or something. Oh, well. Went to the Freedom Challenge. All I see is in Ducks We Trust. It was $100,000 ass, or there was 100,000 ass going KITT a moment ago. Oh, that was 10 minutes ago. You guys are fun. Okay, so 17. I could deal with that. Yeah, give me that. Execute it. All right, I gotta sit up now. I borrowed. I'm already committed. I've committed at least 10 more percent. That means I gotta have posture now. Gotta actually breathe. What am I doing? 6.83. And I already bounced there. So I feel like I'm forgetting the ticker. It's making me anxious just because I know it's another ticker somewhere here. I was watching. Oh, it's top. There we go. I'm just let that be great for now. Maximum pushing on the second green day is 50%, right? So but even with that, I like to do 10, 30, and 50 intervals for my yeah, forget it. I already borrowed for this one. We'll just cover that up now. Yeah, out of sight, out of mind. What am I doing? Okay, so this one needs to go to 350 till it actually hits the resistance, but it's already up 70%. And it needs to go at 140% before it hits that mark. I have 2 trades I can make. I already borrowed 2,300 for this, and that's so I can put down, where do I want this to go? I think it was like 680 minimum. 680 times 2,300. Yeah, so I got 15K on this. Bottom 5. 5. 3 point. Add 30. Only 6. Okay. Add the extra one. Yeah, I know it's gonna get past 6. Forget that. Statistics are lying to me. 5. Do the math. Okay, so There we go. So this is where it bottomed. SNTI. Not that one again. Oh, okay. I was like, why is that not on my scanner? So when it comes to PEGY, remember there's been a lot of bounce shorts that just fall really early lately because the market's been training you to go in early. But for SNTI, just looking on the daily, this kind of goes into the same multi-day runner first red day kind of move. And it also had that like momentum shift looking move from the day before. Over 100% extension, shifted in the after hours. Now, when I say momentum shift, I just mean there's like a high amount of liquidity that is not sustainable into the next day without surpassing the previous day's volume. So like you don't have to have it in the after hours. It can also happen like in the pre-market, or it can happen like towards like the later part of a day. It's just, yeah, you could especially have it in the morning spike. But it's a lot easier to see on multi-day runners like this. But main thing is, this did a massive pullback. I don't know what was the catalyst for yesterday's spike, but it does have low volume. I don't know the low float market cap. Definitely between 20 and 30. Biotech makes it volatile by nature. I like it. I just don't know where the neutralized area that it would like bounce off would be. The main thing is, I wouldn't call this a ideal first red day because it's in the after hours when you have like the spike, which means it's harder to. Oh no, the spike is actually, it's here. but we just don't have a lot of places to risk off of. So if this hypothetically pulled all the way down to like 350, then you could use like the upper parts of this 4, like 450, and then gradually probably go down to like 2 or something like that. That's not right. Good. So it goes back to what I was just saying. I still think it could go to like 360, and then at that point this is about like 40% from the top, and like having that kind of drop would pretty much mean it would bounce the next day. Now that bounce, you whenever you see like a big gap down, you want to bounce to be like 10 to 20%. And like when it's a morning bounce, you want it to have something to risk off of, but we don't have anything yet. So this, if it does bounces at like 160, I wonder what kind of day after that point is it going to have? Because if it has something like the FNGR yesterday, where it kind of does like this bowl shape, I don't like that. We want something. We want something that can like overlap with the previous consolidation. I'm just trying to see if this is this going to be a new thing? Like, is there going to be like 2-3 more of these? Should I just start going in on days that like the front end pretty much? As like what we're trying to do right now is a back end play. Wait for like a lot of money to be trapped at a specific place and have a risk based off of like resistance after it bounces. But here, well, you could go overnight small. Oh well. What am I doing? Why are you interested in shorting KITT when it has a float rotation and not so much that it is prior insufficiency? Short answer is because it's in front of my face. The long answer, isn't this the one that had resistance? Oh no, it was the IPO from September, which 3 million resistance at that went up to like 7. So I already would have shorted this for less. Like I would have shorted it at like 120, 140, just because I like those kind of extension ranges. When I saw it had a 3 million resistance at that point, yeah, when it had like a 3 million, I'll just show you. So I like doing not gap plus bounce, but you know, having a gap and adding it to some kind of resistance. As long as the resistance is matched with like a certain amount of extension, I feel like it throws a lot of odds in my direction. Now, breaking light resistances is also like pretty bearish. So like if it's under 50% and then it breaks a light resistance, then, you know, I go into it. But with this IPO, it goes up to like 7 something, and then it has another one that goes up to like 9. Even though these are like really light, I feel like I would have just shorted based off the extension. I want to match it with one of those. And in terms of how I know it's going to go that far, I was just purely basing it on the news that it had, which was, you know, exclusive rights to whatever technology just approved of it, or it just got approved for. Autonomous amphibious robot. So, you know, it's going to do stuff in the water and it's going to do stuff in the stocks. Now, it did get up to 1.6, or what do you call that? 640. So that's still not 100%, because 100% would put it at no, that is 100%. 640. Where's 640 on here? I was right in the middle of it. Well, I'll show you what I did. So I think this went to like 505. Yeah. 505. And then I like to do bounces from whatever low a day is created. Then the close is like 322. So I convert it to percentage. I add on the bouncing percentages. Like, so like 30, 50, 70, 90, 150, things like that. So I put in 50 and I put that on there. And I got me 6666. And, you know, this is my football number and this was my basketball number. And I just put them together. There you go. You know, I have a backup, which is a PEGY. If this gets up to 350, and I feel like gambling, and I'd go over there. Now the chances of it, you know, slowly grinding past that resistance, you know, 40 million, I still consider it light, but again, with the extension of 140%, that's a little hard to deny a lot of short sellers from going in, especially since it'd be at over $3 at that point, which, you know, if you consolidate for a bit, like you'll have so many reasons around 60 million volume to like go in at that level. What is that? 60 million what, times was it 3.5? Well, you wouldn't do it that way because it wouldn't have the consolidation. No, I'm just leave it at that. Bruh, this went to 10 cents. That's tragic. Oh, paid a whole 7 cents per share above it. But with float rotations, that reduce the bag holders massively, if not all, right? Yeah. So we said it before. If you have like a micro float, That's the max that can be trapped at a single dollar level. But we're also thinking about layers. You can have layers of support, and you can also have layers of resistance. And when there's a double layer resistance, as long as there's enough like time, my board almost fell. There's enough time in between, you can create some like top heaviness. And I'm just trying to predict what those layers are going to be and what am I willing to risk. How do I explain this? Should I explain this is the real question. First, back order messed up. No, right. So you remember when you have like over, was it 15 or 20 million rotations, the ticker is supposed to be untradeable. The reason that happens is because, at that point, it just becomes a hype play. It doesn't follow normal statistics. Everything before that point should have a realm of like reference. And like what you're referencing it to is normal like pushing and pulling statistics. You can get exhausted when you're in like the micro float territory. I'm forgetting something. Oh, okay, here we go. There we go. Yeah, that's all I want to say for now. Yeah. Even with flow rotation, there could be bag holders and layers of resistance. Yes. An example, think of GeoVX. There was an offering at 240, but you remember there was also a layer of resistance at 280, 260, 210, but the offering happened at 240. Now, each one of the levels, or each one of the price levels, there's a crap. I don't think that's coming back up. It just cracked that 5. Hey, this one's going up though. But I already spent like 100 on the bar. But you're trying to get like 15 to like 30% on each one of these trades. It's not always like the multiple layers of support or resistance that's going to get you to that point. You also have to figure out which one is going to make you feel the most comfortable. And with the lower float, it's easier to grind past them. But if you have multiple, it makes you feel like a little more secure. So if you have, like PEGY, and say it has like multiple, like 3 layers, let's give it a number, 3 layers of support. And then each one of those supports are about like 45 minutes. If you compare that to like a $5 stock with a consolidation for like 3 hours, the $5 stock already has like a naturally higher price, and so it's expected to come down if they have the same amount of like extension. But when it comes to like having multiple layers, I feel like the market maker is trying to hide where you want your risk level to be. And whenever you have like, you know, like things that look like they're obviously manipulated, like a barcode looking thing, that adds up like little grains of like doubt. And then that by itself, like in those panic candles, can be used as a light resistance. And so when you have like a big obvious like consolidation, that can sometimes be a target more than just like a safety net. Versus if you do like multiple layers, then you know, you don't know which layer has the most like smoke or like the most pressure. And so you obviously want to use like the last one as your you know, your like last resort. Yeah. But okay, I'm thinking way too hard into this. I don't even know why I'm on this topic. I'm upset that I just bought this. Wait a second. Where's the halfway point? I don't think that's right. Oh no, that's not the halfway point. That's just where the support line was. Okay. 60. Yeah. I did it. Okay, 4.8. All right, what was I talking about? All right, so just how do you say this? So like when you go up on like an uptrend like this, every time this stops, that's another level that people are going to remember, because like, you know, on the way up they don't know that's not the top, so there's always going to be like a pullback. So I like to count those levels, because on the way down sometimes those levels become the support or the resistance, and then they flip back and forth. Now the ones with the like heaviest volume, those are the ones that become, the most respected levels. It also depends on the time frame. The higher the time frame, the more the respect of that level scales too. But since this one just went to 460 and I already borrowed, let's see if I can get a bounce. Well, I already went to the 50% mark. I might just skip it. And this one's actually getting pretty close to the, oh well. Just waiting for PEGY to hit 3.5. Bro, what is up? Like it's probably this. Like that thing keeps scaring me. Like it has like a commercial that like comes on for half a second. But what am I doing? Someone said there was something at 12. Just in case this comes back, I'm gonna keep the borrow. But I think I might borrow for PEGY, waiting for that to move up there. Now I kind of want to go in early just in case it falls early. But okay. I did not understand rotation. I thought rotation means all tradable shares change hands. So no bag holders anymore. Only mental resistance. Well, I thought it appears to be wrong. So yeah, that sounds familiar. Yeah, like I think Steven calls it that. When all there's always going to be like some sticky volume. So I wouldn't say all hands, all shares are being like switched in hands. I forgot what I was about to say now. Oh yeah. Something about the volume, like whole dollar resistance. Use the whole dollar as the resistance, something like that. But so I don't know if it actually can get all the way up to 350. I kind of want to go in now, especially since it's like at 100%. Yeah, but main thing is, yeah, I think when he says like float rotations, it does mean that all the shares are supposed to switch hands. But I don't think all of them are going to switch. I think there's going to be, I forgot what it was. It was like 10% or 25. Like, because I know there's completely different. But there's always going to be a certain amount that they won't switch. They're just the stubborn ones that, they put their house on this. And they're going to hold it until as long as possible. Like diamond hands kind of people. It's kind of the theory behind like consistent resistance. But it's also, I haven't thought about this one in a while. Yeah, you can keep that idea and you can work with it. Just stay consistent. If you tracked, or what do you call it? If you're tracking like float rotation and stuff like that, just stay consistent with it and things should work out for you. I'll just stay consistent with the way I like doing it. All right, guys, it's 10:30. I'm gonna head out. Good luck. Yeah, this actually might fall a little early because of so much volume being taken up by everything else. That's probably actually what happened on KITT. It's the max I can get from the. All right, guys. Peace.